What's good, people? Welcome back to the channel. Now in this video I'm going to break down exactly how I got 100k funded with my MFFx. In this process right here, I actually only used one single pair throughout the whole thing. So on the phase 1 we're going to jump into the dashboard of the phase 2 and also show you guys the certificates of the funded certificate and the payout as well that I received from the firm, right? Showing you guys that if you just have the patience, right, and you know your A+ setups, you guys can easily pass these prop firm challenges, get funded and also get paid. Now just before we do get into the video, guys, make sure you watch my first interview with a prop firm, which was with my MFFx, because I actually recently got funded $300,000 with the firm as well, right? That's the max allocation for the firm, because I also recently passed another 200k funding challenge, right? I actually recorded the phase 2 for you guys live, so I'll drop that shortly after this video, right? So make sure you guys watch that, and before you buy your next MFFx challenge, make sure you guys use the code ADS for a nice 10% discount on your next purchase, right? So that's code ADZ in the checkout code. Now let's get straight into the video, guys. As you can see right here, I've already got a trade lined up, but just before I do that, let's have a quick look at the equity curve and also the history tab right here. So you can see these are the certain trades that I took. I believe in fact this was phase 2. Let's go to the phase 1. So phase 1, I put a tweet out, you can see here of the basic sort of information of this whole of the phase 1. 7 trading days, conservative approach, no more than 1.5% risk. And now these are basically my rules, right? Risk 1 to 2 trades a day maximum. And then as you can see, the equity curve right here, and you can also see the trades that I took now. So you can see here it's a pretty consistent lot size. I was playing around with 1.75 and 3.5 lots, right? And that's due to the strategy that I was using. And as you can see, the one pair that I was trading predominantly was gold, right? And we're going to jump into this trade specifically, just to give you guys one trade from each phase, okay? And as you can see from the certificate side of things, showing you guys the full transparency, you can see the MFFx certificate right here. It was quite a while ago and I'm making this video quite late, but I'll start dropping consistently as always. So you can see right here as well the payout certificate, and you might be thinking, yeah, it's small. I've had much bigger payouts, of course. So the main technique that I like to have on the live stage for at least the first pay cycle only is to just lock in that first payout, right? Because with that first payout will come your maybe a phase 1 and phase 2 bonuses. There's some firms that do that, or you'll get your 110% refund from the firm, right? Some firms are offering 100%, 110%, 115%. So regardless, if you just lock in that first payout, right, and you achieve the minimum amount for withdrawal, you will get your full refund back, making this whole account risk-free, right? So that's the aim with this first part. And initially, guys, when you are funded live for the first time, just risk low to start off with, right? Risk half if you have to, risk 0.25, 0.5%, whatever you're comfortable with, because this is going to lock in your first payout. When you are break even, that gives you a sense of clarity, it gives you a sense of calmness, because now you don't really need to chase anything. You've got the same amount that you paid for the challenge right back, you're playing with the house's money, so you're risk free, and now you can start to look to increase your risk. And that's what I'm doing currently right now with my MFFx, okay? This trade, again, gold only. I was looking at the 4-hour time frame to begin with. Okay, so let's have a quick look at the structure now. If you guys know me and you've followed me for quite a while, you know that I like to mix up my strategies between SMC, ITT, and the support resistance concepts, right? I am mainly a retail trader, but over the years I've implemented a lot of SMC, ITT sort of concepts to help me with the order flow and liquidity side of things, right? But at the end of the day, for me, it's always about structure, and they just tie in very nicely, right? So whatever you think, I'm just going to talk you through what I saw here. Very simply, we had a lot of bearish momentum to start off with. As you can see, the chart is moving from the top left corner down to the bottom right. Okay, so with that being said, you can clearly see the market making clear lower lows, lower highs, kind of in a range here. But at the end of the day, we are making lower lows here and then these lower highs, right? And after this recent push to the downside, breaking this low right here, all I was looking for was like a retest to this zonal area right here, which was at the level of 1933, which you can see some nice reactions off. If you trace it all the way back, you guys will see exactly how I marked that off. And if we have a look at this area, jump onto the 30-minute time frame, very, very clean price action and timing right here. So this was actually the yellow marker here just to help me with the replay tool. This is London session open. So if we just jump down to the 15, you can see again we are basically moving up in a corrective format, and that's what I was looking for, just that sort of struggle to move to the upside, because I know if the ultimate pressure is back down to the downside, we should have a strong momentum push to the downside right there. Now let's jump onto the 5-minute. You can probably see it a little bit better. So you can see right here, the market came into my area of resistance at 1933, and at this point I hadn't entered. Let's see the next candle. Okay, so at this point I pretty much entered right there because I saw a variation pattern. And if we look at the 15-minute time frame, that's also a very nice rejection candlestick. Okay, so with this rejection candlestick now on the 15-minute time frame, I have also got inside that a double 5-minute bearish candle, which is also known as a variation pattern, right? So that's a little bit of multiple time frame correlation. And of course, with the higher time frame of the 1 hour, we were pretty much bearish. So I went for an entry right here, put my stops above the level of resistance. And as you can see, the market played out pretty nicely, came to this level of support, which a lot of people would have thought, okay, it's going to maybe continue this bullish momentum off. But with the higher time frame analysis, I still held this trade, and you can see here rejected back off my area of resistance. And that's the trick, guys. A lot of times the market will try and, you know, bait you out and make you feel like, you know, you need to close the trade early and it's not respecting your level of resistance. But for me, the more times it tests it, the weaker this area is going to get, or sorry, more respected, sorry, and eventually it can drop to the downside, right? Because if, as long as it can show rejections and maintain below this level of resistance, I have a lot more confidence that the market's going to drop, right? So you can see here the market coming back into this area. Now this was around New York session, a lot of volume increase. Again, it goes for a little liquidity grab, and then it hits my nice 1 to 2.3 risk to reward, because I was targeting this area of support. So a nice low risk to reward. But again, with this setup, I do have a high win rate. So if we look over here, you guys can see with the phase 1, if we go over to the statistics, you can see my win rate was around 66%. I did this over 20 trades. Again, the risk to reward wasn't crazy, only 1 to 1.1s. Okay, but you can see again the best trade, the worst trade, and the win rate made up for it, giving us that positive net reward, right? So that's pretty much the phase 1 trade right there. Let's jump into the phase 2, and let's jump into the metrics first of all. And with phase 2 is a much smoother process. Again, if we look over here, this is my sort of rules and how I went about it. Again, 1 pair, 1 session, gold, and this time London session. And again, 4 trades in 3 weeks. So I didn't rush whatsoever. So a lot of you traders will want to try and pass your challenges in 1 trade. Now, although that does sound very ideal, you have to understand it's not always possible, okay? When the setup is very good, you can go ahead and risk as much as you want on it, right? If you believe in it, but you shouldn't be crying when the stop loss gets hit and maybe your account's blown, or you're close to blowing your account from that 1 trade alone, right? Whatever it is, make sure you guys are comfortable with that trade and make sure you're comfortable with the risk, and go ahead and risk accordingly. But like I said here, 4 trades in 3 weeks. So I know exactly what my A+ setup's going to be. This is something that you guys need to implement in your trading as well, right? When you know what your best play is going to be, why would you trade anything else, right? You have to try and understand what your best play is, and you can only do that through back testing, forward testing, and mainly journaling, okay? Without statistics, without data-driven results, you won't have any confidence in your strategy. You won't have any confidence in your edge, right? And after you let it play out over a series of trades specifically, that's when you're going to get the ultimate confidence in your ability to trade and your edge overall, right? So when you do take a couple losses, it doesn't bother you whatsoever, right? For me, with this risk to reward and this higher win rate, is giving me a sense of calmness, because personally I like to have higher win rates. It doesn't affect my confidence as much when I'm, you know, losing, because I know on maybe the next trade or 2 I will have a win, right? And a win for me is very important, because at the end of the day, if a setup is looking good, I can risk higher on it and therefore make, you know, that same amount, if not more, on the trade that I lost, right? As you can see here, conservative approach, no more than 1% risk, 1 to 2 trades a day max. This is one principle that I like to stick to a lot of the time, 1 or 2 trades, and with the method that I like to trade on gold especially. And by the way, you guys can also trade 1 pair, whichever pair you like. It doesn't have to be gold, it can be GBP, JPY, GU, it can be EU, whatever it is you feel comfortable with, because I know it might sound cliche, but when you do understand how a pair can move, it does really give you that edge, and it gives you that confidence when it comes to trading that one specific pair, right? For me, the way I look at it is, there's not many variables in play right now that are affecting my way of trading. So when you have multiple pairs and multiple sessions you're trading, multiple setups, multiple different indicators, whatever it might be, right? Whether you're trading order blocks, FEGs, support resistance, break and retests, bounce plays, EMAs, whatever it might be, right? If you're trading all of them at the same time, right, every single day in different sessions, how do you know which metric is the one to focus more on, the one to focus less on, and so on, right? So you guys get the picture. For me, I like to refine my pairs down to 1 pair, 1 or 2 sessions, maybe London or New York at the most, and again 1 to 2 trades in a day maximum. I don't care whatever happens, 1 to 2 trades alone, right? It'll prevent you from over trading, over leveraging, and revenge trading, okay? So stick to that. As you can see here, super clean equity curve. Again, just had the push, didn't rush the trades here, still waited a few days. As you can see, didn't see my setup form, had the patience, relaxed, and as again you can see, we hit the profit target. And again, we're going to go through this trade right here, which gave me 3.3% on the phase 2, right? And again, that was the profit target of 5k that we needed. So let's jump straight into that. So now moving on to the second trade, you can see right here a beautiful market structure on gold forming on the 15-minute time frame. Not exactly the 15-minute time frame, I've just zoomed out enough for you guys to see, what we're looking at here. So again, I saw the market forming clean higher highs and higher lows, okay, indicating a nice bullish momentum, bullish environment. But then what I saw here was a clean, you can say turtle soup from the ICT traders. Nice grab of, you can see that these equal highs were formed after the market was making multiple higher highs. Eventually it peaked out here, and then we saw that grab of liquidity and a push to the downside. When I saw this push to the downside after the market had broken multiple levels of structure, all I then waited for was the market to retrace into my areas of interest to then have that push to the downside, right? So just ignore this yellow line, it's for the replay tool, right? And as you can see right there, the market has now started to form in a corrective manner to the upside, indicating that its bullish momentum is not so strong, and instead it wants to go to the downside, right? So when it approached this first key level right here at 1924, I believe, or 1925, yeah, 1924.9, so let's call it 1925. When it approached this area here, I got in on an aggressive entry. Didn't really need to, wasn't really the best play, but as you can see here, got entered right there. I had my stops above this level of resistance, above multiple other highs, which you can see right here. The market, once it hit this area, it had a nice bounce and then it pushed to the downside. Okay, so I put my stops above these highs right here, and then you can see if we jump down to the 5-minute time frame, barely saw any rejections. Wasn't the best entry there, just one rejection entered. And then as you can see, the market consolidated on my area. As it came back up into my area of my drawdown, sorry, I went in and entered another position. I did have a lot more confidence in this trade right here, so this is like a grab of liquidity. And we also were approaching the New York session. New York session usually can give you a lot of reversals, okay? So I will drop more videos on that in the future, but you can see right here, we had a nice entry. With this entry right here, we had a 13 pip stop loss. With this, we had a nice 25-30 pip stop loss. And as you can see from the history tab right here, this was with the same lot size, okay? So altogether I was risking, like I said, around 1.25% max, or 1.5%, sorry, on this trade right here. And I believe I was already up on the trade, I think, on the account. So we can see here that the market went into my drawdown area, and then the New York session had opened, and this is where we had the nice push to the downside. Very, very good push, very strong momentum. And like I said before, in previous videos as well, the risk in trading is always predetermined, but the reward is always unpredictable, right? So the risk is always predetermined, but the reward is always unpredictable. So in this scenario here, the reward that I was expecting was much bigger than I thought, because at this point, look at how far the market dropped, right? And with my strategy being something that's a higher win rate, you always have the opportunity to get higher risk to rewards as well, right? Because of trades like this that can occur. You can imagine, for example, you holding this trade for a lot longer. If I did, for example, a 1 to 6 and a 1 to 15, for example, right? If you're holding both these trades at that point, I just got out safely because I didn't need to hold for much longer. But you can see again the high win rate coming into play, and also the high risk to reward that is available when you trade this type of strategy. So you can see a mixture of confluences. Initially we start off with the trend. You can see the key levels that we're looking at. You can see the rejections, of course, when it comes to entries. Make sure you guys join my academy if you guys want to know the exact way of how I go about marking a chart, entering before, during and after. Everything like that is discussed in the academy, right? You guys can see for yourselves. People are making money like every single day, and you can see here the withdrawals. We're literally showing people how to learn the content that I have, the pre-recorded course, the actual mentorship that I have with myself, the shared trade ideas, the webinars and everything like that. People are learning, applying into their trades, getting funded, and also getting paid, and that's the aim overall with these prop firms. And as you guys saw from the phase 2 statistics, 87% win rate, 2.9 risk to reward. Best trade was 2k, which was 2%, and the worst trade was less than 0.5%, so like 1/4%, right? And that was over 8 trades. So you can see the nice risk to reward, the nice system playing out with detailed statistics right here. And yeah, that's pretty much sums it up, guys. Again, like I said, I got that payout from the firm. I'm now 300k funded with the firm, and I'll actually be getting another payout this Tuesday, which is in around 4 days from now, okay? So again, guys, if you haven't already, go ahead and follow me on my socials. Everything is at Sniper Ads. I'll be dropping more content like this very, very regularly. I'll be dropping that phase 2 200k challenge, which I passed live for you guys next week, hopefully. Remember, drop a like, comment and subscribe if you enjoyed this video, and I'll catch you all in the next one. Peace.